This is not financial advice. I'm recording my thoughts about Okta, which is an identity solutions provider. Its stock is down about 55% year to date, and it is currently trading at about $98 with a market cap of about $15 billion. When I look into its revenue for the past 12 months, they made about $1.5 billion of revenue, which represents a price to sales of 10, which is expensive. When I look into the net income, it's about negative $1 billion. And in my opinion, it is a big red flag because in order to make $1.5 billion of revenue, they managed to lose $1 billion. In order to cover this, they have to either take a lot of debt or dilute the shareholders significantly. I will talk about it during the evaluation phase. Personally, I do not know much about identity solutions software, but in my opinion, unless you are a user of their products or very involved in the cybersecurity space, you will not know exactly what they are doing. But fortunately, we have a metric called retention rate, which tells us about how the clients are liking Okta's products. Okta's retention rate is about 120%, which tells me that clients love their product and are willing to spend more and more money year after year on Okta's products. So I'm confident about this company's potential in future. Let's look at how they are doing with respect to revenue. In 2021, they made about $1.3 billion of revenue. And this year, in 2022, they're saying they can make about $1.8 billion of revenue. That represents a 40% year-on-year growth. For long term, until financial year of 2026, the management is saying that they can grow their revenue at about 35% on an average. In my opinion, it is hard to do, but I'm going to trust this company's management and say that they can break that $4 billion revenue mark in 2026. Let's look at Okta's evaluation in 2025. They made about $1.3 billion of revenue in 2021, and they are committing to 35% growth year on year for the next 4 years. This would make a $4.3 billion of revenue for Okta in 2025. Okta's management said they can achieve 20% free cash flow margin, so I'm going to assume the same 20% for the net profit margin as well. If I assume 20% net profit margin on this $4.3 billion of revenue, they would make about $860 million of net income. For a company that is growing in the 35% range and has a free cash flow margin of 20%, I can assume a 25 multiple. So if I assume a 25 multiple on this $860 million of net income, this company would be worth about $22 billion in 2025. Currently, Okta has about 150 million shares, but like I said before, they are diluting the shareholders significantly. In the past 3 years, the average dilution is more than 10%, which hurts the shareholders significantly. I don't know if people are looking into the dilution or not, but for this evaluation, I'm only going to assume a 5% dilution, which is very, very optimistic. So if I assume a 5% dilution year on year, the number of outstanding shares would be about 190 million. So the stock price would be about $112 in 2025 if they execute on their promises. So the stock is now at about $100, right? So that's about 10% gain in 4 years with high execution risk. I do not see this as compelling at all. In fact, I'm going to stay away from this company, and I will definitely consider this company if I look at least a 2 or 2.5x in 3 to 4 years, which would be a good risk reward for me. I'm going to buy this stock if it falls below $50, but for now, I'm going to pass this stock.